Welcome to the May Market Update. I'm Rachel Blackhall.
And I'm Andrew Dawkins. For the second month in a row, UK smaller funds that we operate have outperformed all the other sectors, and it actually is the first time in a long while that UK smaller companies are now the leading sector for all the markets over all time periods. So over the last few months, years, and well, not decades, but over the last 10 years anyway, outperforming America. Thanks really to the effects of Brexit, where we had market underperformance, and then we got Brexit sorted out. Well, mostly there's still the financial services sector to take care of, but there's a lot of money now coming back into the UK from around the world, where they're saying, right, well, the UK economy is doing well, backed by a great rollout of the vaccines, which is having enormous effects, so one of the best rollouts in the world, and confidence is booming. So despite what the BBC predicted months ago, the UK is open and it's doing tremendously well. One of the best performing sectors, as we say, in the world at the moment. We increased our exposure to UK equities a number of years ago following Brexit, and it's starting to bear fruit now. So well done for everybody for sticking to it.
In the UK, believe it or not, I know it's Domino's Pizza, but this is one of the companies within our UK fund which has performed exceptionally well just over the recent months, actually up 13%. So Domino's, which really hasn't been affected by the pandemic as many other companies have, their trading has been exceptional, and they've actually said that the New Year period, so the first quarter of this year, delivered its highest ever weekly sales figure. Yeah, pun intended. And it's also recently announced the disposals of operations in Sweden and Iceland to further consolidate focus on the UK market. So a company that's been doing very well, and hopefully it will continue to contribute to the UK growth. So
the US, well, funnily, it's actually been, for the US funds that we've got, it's actually been a negative month. So that's the first time in ages we've seen that. I think a lot of this is down to the big FANG stock, not necessarily underperforming, but not performing as sparklingly as they did last year at the beginning of this, as investors seek new opportunities for short-term growth. So a little bit down on the month, but overall, obviously, over time periods of 1 year, 3 year, 5 years, 10 years, etc., the US has delivered sparkling returns, really, really good. Stimulus packages continue to be rolled out. Although just at the moment they're debating about how many $1 trillion they're going to pump into the economy. So the two political parties need to get together and decide how much is going to be in there. The Federal Reserve, who are in charge of the money supply, don't seem to be too bothered about the prospect of inflation coming along later in the year, and continuing with their engagement in pumping all this money out. Vaccine rollout has been sparkling. Simply because of the fact that their huge buying power means that they've taken up the bulk of the share of world products in that area. So it's done very, very well. Big thing that's still the fly in the ointment is the disputes with various nations around the world, especially China. And Biden seems to be having the same success that Trump did in trying to ease these tensions. There doesn't seem to be any end in sight for that, but that's the sort of the negative side of things. But no doubt something will happen at some stage on that.
So yeah, the US fund is one fund that differs from all the others in our portfolio in that it actually tracks the index, the Standard & Poor's Total Market Index. So this index comprises of large, mid, small and microcap companies in the US. So the index itself has over 3,500 companies in it, and the big players there you'll see on the screen are Amazon, Apple, Microsoft, Tesla, and they've largely contributed to the excellent growth that we've seen in the past. So big players, names that you already know, and I'm sure it will return.
Yeah, it's been a good one. Again, a positive month this month. It's been really, I think, a steady Eddie, although it's been probably fairly spectacular, but steady Eddie in terms of the funds that we have under our belt, delivering good returns over all time periods. Vaccine rollout, well, it's sort of mixed, but seems to be going in the right direction. Those economies that are particularly sensitive to tourism, they're hoping that the vaccine rollout and the relaxation of travel restrictions will be good news for them. So here's to that, and being able to go away and do things that we got used to from before. The Green Deal, the EU's attempt to pump billions, if not trillions of euros into the market to stimulate economies is starting to take shape now. And a number of the companies that we invest in will be beneficiaries of this. So Europe is actually doing very, very well for us as a portfolio, and we're pleased to include it, and it should be quite positive for us and our clients going forward.
And one of the largest holdings within our European fund is RELX. So people who have tuned in before will no doubt have seen this name. We have touched on it in a little bit about what they do. But just to remind you, they are a multinational information and analytics company. So what they're doing at the moment is they've teamed up with medical scientists and professionals in India to help with the current COVID-19 crisis over there especially. They've set up support groups to help families in various regions. They have a team providing verified information relating to the medicines, hospital beds and the provision of oxygen. So many of the hospitals out in India have actually run out of oxygen. So together, RELX and the partners that are based out in there, they've made a donation of 22 high-flow oxygen concentrators, which is supporting over 12,000 patients with the illness. So they're really doing a lot of good work out there, and having that information and data to help is doing great work. Over to the Far East.
What's the Far East? Well, yeah, it's been a fairly underwhelming month for our Far East funds. Fairly flat growth, really. A lot of countries such as Taiwan doing really, really well for the technology stock. World shortage of semiconductors and various other manufacturing chip components and things like that. Too technical for me, but they benefit on that. There's other parts of the area though, Japan and Thailand, who are seeing a resurgence of COVID, and that's hampering growth. But the Far East as a long-term market has got to be the place where it's at, because the population's getting richer, they're buying more quality products, they're importing, but they're also trading between themselves. And it's an area that we want to be involved in. As you know, we increased our exposure to the Far East a couple of years ago, and that's benefiting the fund portfolio enormously. Do you have a story from the Far East?
I do. I did manage to pick something. So we like good news stories, not to be doom and gloom. So as Andrew mentioned, this sector, it might suffer over the short term due to spikes in COVID cases. But one of the companies who's a newer holding in this fund is Dr. Reddy's Laboratories. They are part of a limited pilot in the soft launch of the Sputnik V vaccine in India, which we have heard on the news previously. It was used for the Brazilian variant. So that has now landed in India. So as I said, this vaccine was developed in Moscow, but it has now been rolled out in India in an attempt to try and stop the spread of the virus over there. So we do hope to see this improve that part of the world.
Yeah. Sorry. What's the next stage?
We have property.
Property. Well, yeah. Nothing too exciting to report here. So, do I say anything about this?
Well, when I've looked into it, that's what I thought as well. There's not really any exciting stories to tell on property right now. There's not been much movement. So I don't think there's much need to cover old ground. And when there is something to cover, we'll let you know.
So fixed interest, as we know before, we've kept hammering on about this, just a couple of posh words for debt. So lending money to companies and governments, both here in the UK and overseas. Big fear you've got is inflation, because if you're lending money to a company or a government and you're getting a 1% return, that's fine. If inflation's at 0.5%, you're making a margin, you're making a profit. If inflation goes above 1%, you're making a loss, and therefore the fixed interest return becomes negative, and you don't really want to hold that. And we're seeing at the moment then a lot of the fixed interest funds are repositioning because of the fear of inflation later on in this year and into next year, and trying to sell off those assets that will be badly affected. So we've seen negative returns from a number of the funds, and this is why we've been hammering on for the last few months about people that are wanting to take less risk. Then fixed interest is perhaps an area that we should just cut down on in terms of size, and concentrate more on the equity and the property side, because that will give us more of a balanced approach. But we mustn't forget that fixed interest has been a great friend of ours for the last 30 odd years, and has delivered spanking returns.
Yeah, absolutely. It's different to the equity sectors in that we can't really talk about any particular share purchases and how a company has evolved and things. So it can be seen as a little bit dull, but absolutely, combine it with all other sectors, and that's how we create the right balance. across the world to get the right attitude to risk for our clients and our portfolios. It really is a valuable component.
As we've been saying ever since Brexit referendum came out, it's a great time to be invested. It really is, and the next week is going to be fantastic in terms of returns, simply because of the fact that all around the world people have got cash in the bank that really does nothing for an economy, because until it's spent, it's creating no wealth for anybody. Once that money's spent, it releases taxes, it creates employment, it creates wealth, and it does really, really well for not only for governments and people at large, but also investors. We're fully into that. We're fully invested. The stock we hold should really do superbly well over the next 3 and 5 years, but we always do, because there may be companies and there may be assets to avoid, and we avoid them, and there's other companies and assets that make money whether times are good or bad. So investing is always good, never a bad time to invest, and always a good time to invest with us.